Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Wednesday, February the 11th, 2026. And today's quick bite is especially important for business owners, property managers, association boards, and anyone who owns or operates a business in Florida. While homeowners and auto insurance have been grabbing the headlines lately with rate cuts and refunds, the commercial insurance market has been quietly shifting in the background. And that shift matters. As of February the 6th, 2026, Florida's commercial insurance market has officially entered what regulators and carriers are calling a post-reform stabilization phase. That sounds comforting, but let me translate that into plain English. There is more capacity, meaning more companies are willing to write business in Florida, but underwriting is tighter than ever. So today we're going to walk through what that really means for each major commercial line, what business owners are experiencing right now, and how to navigate this new environment without surprises. We never really touch on commercials, so I'm really excited to jump into some commercial today. Let's get into it. Before we go line by line, I want to set expectations. Stabilization does not mean prices are dropping across the board. It does not mean underwriting is relaxed. And it definitely does not mean every business is suddenly insurable without conditions. What this does mean is that insurance companies now believe the legal environment in Florida is more predictable than it was in 2022 and 2023. That predictability attracts capital, and capital creates options, but those options come with rules. Let's start with commercial property insurance. For the first time in several years, the hard market for commercial property is showing signs of softening, but only for well maintained assets. Newer construction, non coastal properties, and buildings with updated roofs and systems are finally seeing some breathing room. In many cases, rates are flat or increasing only slightly. Older buildings, especially frame construction or properties near the coast, are still facing increases in the 10 to 15% range. Carriers remain extremely cautious about structural integrity, roof condition, and wind exposure. One of the biggest changes coming is legislative. House Bill 1503 and Senate Bill 1716 are creating a commercial insurance clearinghouse, similar to what exists for personal lines. This system is designed to force high value commercial properties back into the private market before they can rely on state backed options. The intent is to prevent commercial properties from lingering in citizen style programs when private capacity exists. And that private capacity is growing. 17 new companies have entered Florida in the last 18 months, many of them actively targeting mid market office and retail spaces. They are hungry, but they are very selective. From my seat, this is the first time in a while that good risk management is being rewarded again. It was really hard. For the last few years, it's been really hard to try to place commercial property. It's been really hard. So, yeah, the market seems to be softening a little bit when it comes to commercial property. It's still, a lot of companies still are not writing it unless it really meets their guidelines. Now, let's talk about general liability, which remains the most unpredictable commercial line. General liability is still heavily affected by what the industry calls social inflation, meaning jury awards and settlements that far exceed historical norms. Businesses with high foot traffic, customer interaction, on or premises exposure are still seeing premium increases in the 5 to 12% range on average. However, something important is happening legislatively. Senate Bill 1396, which addresses litigation financing, passed the Senate Rules Committee on February 3rd and is headed in the full Senate vote. If passed, this bill will require transparency around who is funding lawsuits against businesses. Insurers believe this will reduce inflated settlements by exposing investor influence in litigation. Think of it this way. If a lawsuit is being funded by an outside investor expecting a massive return, that changes how negotiations play out. Transparency changes the leverage. This bill has the potential to be a stabilizing force for general liability premiums, but it has not crossed the finish line yet. Until it does, liability remains the most fragile commercial line. And I've talked about this bill a lot in my prior videos. And I never really thought about how it does affect commercial litigation, especially the general liability litigation. So that's interesting. So it does not only affect the personal lines, it affects commercial lines. Now let's talk about the bright spot. Workers' compensation continues to be the gold medalist of the Florida insurance lines. As of January the 1st, 2026, a 6.9% statewide rate decrease took effect. This marks the 10th consecutive year of reductions. Since the major reforms in 2003, Florida's workers' compensation rates have dropped by a cumulative 79%. Wow, that is not a typo. That's not a typo. The primary drivers are improved workplace safety and a continued drop in the frequency of claims. Even though wages are rising, which increases payroll, most employers are still paying historically low rates per $100 of payroll. From an agency perspective, workers' comp's one of those few areas where Florida truly shines. Unfortunately, commercial auto remains the toughest line in the state. Even with tort reforms, trucking companies and fleets are still seeing rate increases between 10 and 20%. There are two main reasons for this. First, vehicle technology is expensive. Sensors, cameras, and advanced safety systems dramatically increase repair costs. Second, nuclear verdicts are still happening. These are jury awards exceeding $10 million, and they make insurers extremely cautious. In 2026, something else has become very clear. It is nearly impossible to attain preferred commercial auto pricing without telematics. Yeah. Carriers want GPS tracking, driving behavior data, and real time monitoring. Businesses that resist telematics are finding themselves priced out of the best programs. This line remains difficult, and I do not expect that to change quickly. Now, let's talk about what may be the most critical commercial insurance issue in Florida right now: condo and HOA associations. I haven't really honed in on HOAs, but I have really honed in on condo association fees or condo in the condo market, because this is really affecting the condo market here in Florida. As of January the 1st, 2026, the deadline for structural integrity reserve studies, also known as SIRS, has arrived for condominiums 3 stories or higher. We are officially in what I call the funding era. Associations can no longer waive reserve funding for roofs, plumbing, electrical, and structural components. That has led to large special assessments across the state. Some owners are shocked. Others saw it coming. From an insurance standpoint, this matters because well-funded reserves and completed studies make associations more attractive to carriers. Insurance costs for condo master policies are stabilizing, but they remain high. House Bill 1021, which took effect January the 1st, 2026, now requires associations with 25 or more units to post budgets, studies, and insurance information online. Transparency is no longer optional. There is also some help on the horizon. My Safe Florida condominium grant program under Senate Bill 1452 is moving through the session. This program is designed to help associations fund wind hardening projects like windows and roofs, which can directly lower premiums. I was interested to find out about this. I've always talked about My Safe Florida Home grants for homeowners, but now they're trying to extend it to condos. Here's the takeaway for business owners. The commercial insurance market is no longer in crisis mode, but it is not forgiving either. Good risks are being rewarded, poor maintenance, outdated buildings, and weak risk management is being priced aggressively. This is a market where preparation matters, documentation matters, inspections matter, and working with someone who understands carrier appetite matters more than ever. If today's quick bite helped you understand where Florida's commercial insurance market stands in 2026, now is a great time to review your policies and make sure they reflect your actual operations. Commercial insurance is no longer one size fits all. To request a quote or policy review, please visit www.isominsurancegroup.com, which again is right below this video. Legislation and markets move slowly until they don't. And preparation always beats reaction. If you found this video helpful, please like the video, share it with your friends and family, and drop a comment below with any topics that you would like for me to cover in any future episodes. And please, please, please subscribe. Subscription to the channel will help you know exactly when a new video drops. Quick Bite episodes drop Monday, Wednesday, and Friday at 2 p.m. Eastern. Remember, this video is for educational purposes only and should not be taken as specific insurance, legal, or tax advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda, agency owner of the Isom Insurance Group here in sunny Florida. Thank you for watching, and I will see you next time. Please, please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.